Monetary Policy Committee of the Central Bank is expected to announce some critical monetary decisions today. This is the 20th of May. Today is Tuesday, and they are just at this point. I think the committee is just around concluding its 300th MPC meeting. The meeting started yesterday, May 19, and is expected and it started in Abuja. Basically, the Monetary Policy Committee is a committee of the Central Bank that basically makes decisions on the monetary policy of the country, including things like the benchmark interest rate, and we're talking about cash reserve ratio of the bank, and also the liquidity ratio. During the previous one that held in February 2025, the MPC retained MPR at 27.5%. Basically, the MPR is the key interest rate that influences all the other interest rates in the economy, talking about bank lending rates and including fixed income rates. The decision to retain the MPR came after the National Bureau of Statistics, that's the NBS, reported inflation figures dropping to 24.48%. Then, if we recall that there was a inflation rebasing that happened in February that caused inflation to drastically drop from 34.8% to 24.48% in February. Now, the committee kept all its other financial measures unchanged. It kept the CRR at 50%, the liquidity ratio at 30%, and the asymmetric corridor was unchanged also. The question now is, what direction will the MPC go this time? Now, for April 2025, we saw inflation drop to 23.7%. We already saw Yemi Cardoso talk about the fact that there may be a slowdown in how they hike interest rates. Will the MPC now decide to give us we will see a drop? We don't know. What should the economy expect? Are we going to lower rates or raise rates or retain rates? To discuss expectations from the MPC, we have been joined by Muhammad Akonji, one of our analysts here at Business Day. Good morning, sir.
Good morning, David. Thank you very much for having me.
So thank you for joining us.
Thank you.
What are your expectations on the MPC meeting this morning? Are we seeing what are expectations for the MPR decision especially
today? Thank you very much for having me again, and it's my pleasure to be here one more time. Just like you read in your intro speech, this is the 300th MPC meeting of the central bank, and of course, a lot of expectations are actually hinging around it today. You know, you've seen economists, analysts, industry watchers, investment bankers, all of them, you know, trying to be able to speculate at what exactly would the CBN do. But we know that the CBN cannot just take decision. The MPC, sorry, I'm talking about the MPC, can't take decision in isolation. The decision will have to be able to hinge on economic fundamentals. Okay. And that is why it is important. You have to be able to look at those economic fundamentals, just like you'll be able to read one of them. Inflation, at least the one NBS released for April, was about 23.7%. And you also see that the food inflation also declined as well, to 21%. So we know that will play a very important role in what they are going to do. Of course, we know the three decisions the CBN will take is that, of course, hike the rate further from the present rate that you'll be able to mention 27.5%, or reduce it from that level, or they'll be able to maintain rate. Of course, I'll be able to tell you my own. I don't have a crystal ball here to say this is what they are going to do. But if I'm able to look at the following economic fundamentals, which I'm sure you'll be able to ask me further, we look at inflation at least, even though there are still concerns out there as to whether that is the true reflection of the real level of inflation or just the nominal value. But at least we have the record at least 2 consecutive months now. They've like a drop ever since the rebasing has actually been done in January and February for GDP and that. 2, the Q4 growth as well was 3.4%. We're still expecting the Q1. That's not been released yet by the MBS, which I know also be able to play a very important role as to what direction the CBN will take. And on the back of that was the World Bank's report that was recently released, the Nigeria Development Update. And if you remember what they advised the central bank, having given kudos to the central bank for some of the policies that they have taken, you know, in terms of exchange rate, in terms of price stability, one of their warnings there was that the central bank should not lower the rate. I'm just talking about what World Bank said, because why? The elevated inflation is not, we are not yet out of the woods yet when it comes to, you know, price deceleration or price stability. That is actually one of their warnings. But I'm sure a lot of Nigerians who
Especially those in the manufacturing
space. Thank you very much.
Those
I'm sure you had CPP, you had the OPS, organized private sector,
yes.
the Center for the Promotion of Private Enterprises, MAN, all of them actually be able to talk about at the current rate of 27.5%. It is strangulating the sector. Yes. It's killing. I'm
when
sure.
You look at it, I wrote a story recently where I looked at the fact that manufacturers are now actually prioritize paying debt over
investing back in the business.
Over investing back in their business.
Was that about because the cost of borrowing a loan because we're just saying it's 27.5%. That is overnight lending from central bank. Yes. Asymmetric corridor is plus 500 basis points, which means that if you go to the bank to get the loan, it's around 32.5%.
Some banks even go as high as
42.2% because that's the asymmetric corridor. The CBN tighten around. So the CBN will get, the commercial bank will get the loan from CBN at 27.5. Okay. By the time they give it out there, the overnight lending rate at plus 500, that is going to about 32.5 or as much as 35%. That can really strangulate business. So I know also most of them have actually been the advocate of, yes, we are waiting what central bank will do. They will be able to lay, just like I said, World Bank position and what you also mentioned about the CBN governor, that yes, we are not at the hoods yet when it comes to inflation. It's still in the double-digit realm. And don't forget that our target this year, based on the budget assumption, is that we should achieve 15% inflation rate.
Is that possible?
Okay, but that's maybe another kettle of fish entirely. But with the rebasing, likely we are going to get there. We are likely going to be able to get there.
Get to 15%.
To 15% by the end of the year.
Okay.
If because of the rebasing, because some of those items have been rebased, and you see some other weights added to important items, we now see some sectors are actually contributing more in terms of the calculation of inflation. So with the CPI calculation based on real estate, for example, that is doing quite massively, and some other critical sectors that are now added more weight. So with the weight added to them now, it tends to be able to put that downward pressure on the calculation.
And the basket,
the food basket itself has been expanded to 960 something items. Thank you very much. So those are where the inflation figures might actually be there. Remember, that is numbers. The actual reality is another thing to see. But to me, as I said, there are a lot of factors that will definitely come to play. Just like I said, local factors, external factors will also be able to play a factor. Trump's, crazy policies. Sorry for using the word, if I'm actually able to allow to use that. And his whirlwind of, policies always be able to come with here is allowing countries to be able to see, if the US is trying to be able to do this, if they actually be able to have the Federal Reserve be able to release their rate very, very soon. If they reduce their rate, for example, one good thing about the central bank of other emerging economies is to attract investors because of capital flight. What do? Raise your own so you can attract investors to take advantage of that.
But I don't think,
most of the money here are even not money. That's the question.
Yes.
Maybe the money most of them are not really the money is supposed to be able to go into the real sector.
Yes.
You understand? Yeah, we look at investors who are just financial investors, just looking for the highest interest rate, taking advantage of it, put their money there, and then quickly be able to take advantage of that rate within that.
So one thing, you mentioned something around America's
policies. Okay, if they do that, if they cut their rate further down. Okay.
So I think for our own country, personally, I think there's quite an advantage there.
Of course.
Because
for raising our own or cutting down
for them cutting their own rates, in that Nigeria will be able to benefit from the effect of lowered interest rates in those countries. So we have a lot of these oil majors that are looking to invest in our country. So we have Shell looking to invest $5 billion. We have
the money here. Okay.
If they are able to borrow at some of those lowered interest rates, I think they can channel some of those borrowings into
the real sector of the economy,
into real sectors of countries like ours, where borrowing rate is quite elevated.
And then
okay.
So, but that's what I'm saying. So there are two aspects of it in economics that we look at.
Yes.
So we have the financial market, where you have investors who are just capitalists are just looking for the money itself.
Yes.
And then remember that the major attraction point, the major thing you can be able to dangle at investors, not the real sector investors, the financial sector investors who invested in bonds, in securities and instruments. They are looking for the highest interest rate, remember. So highest interest rate across countries tend to be able to attract them. So one thing about what central bank is also maintained to ensure we attract more dollars into the economy, especially when it comes into the financial instrument, is we are going to be able to raise the rates. That is one of their own. I'm still going to come to what they're likely going to do. I mean, those are the justifications for them to say, let us raise the rate to attract investors. But of course, just like you said, the implication of that is on the real sector. The businesses will bleed. They will be paying as much as possible, I mean, over their nose to be able to meet up most of their debt obligations, or most of their borrowing obligations that they have, and in that regard.
Eventually to lead to some form of inflation.
Inflation itself. And then the recession can even likely, because productivity will be affected. And the implication of that is inflation will likely occur, recession will likely be the resultant effect, and unemployment will follow. So most of these are most of the dynamics.
So how do you see exchange rate stability
also be able to play an important part?
How is recent exchange rate stability going to influence MPC's decision?
MPC's decision. So just like I said, the very first there of what the central bank governor mentioned is in the area of, okay, we need to attract investors. At the same time, the stability in the exchange rate has actually been one important positives for the central bank, you know, maintaining that rate. And they've been able to take a hold, a very strong hold, that they don't allow it to be able to bolt beyond what is actually necessary, as well as actually be able to go down to be able to solve the problem of, you know, Naira being undervalued as being the concern. But we know that because of the exchange rate stability, they will likely be able to hold the rate, if that is the condition, the concerns that they're looking at. Okay, so by holding the rate, the investors are not being concerned. Those are able to put their money that, okay, they are going to be getting lower interest rates than what it was when they brought into the money into the economy, remember? But at the same time, at least with an stable exchange rate, it means that the purchasing power parity, what they can still be able to buy, is still the same. So because with exchange rate bolting beyond the level, I mean, if it's just going to be able to go beyond 1,600, which is, even though the budget assumption is 1,500, but at least we're seeing 1,000. I mean, the budget assumption 1,400. Okay, so we're seeing about 1,600, and it has remained a bit stable, and at that particular rate, 1,600 every month now, and it remains at that level. Though that will be able to give two concerns to the central bank. One, it has not been able to get to the steady state level, the level they wanted to get to, the 1,500, 1,400 that they wanted to get to. But at least having that amount of about 1,600 above and far, I mean, far not up to the level that they actually expected it to be, will be an impetus for investors as well, to ensure that, okay, there's an element of stability in the Naira, and they can be able to put their money, I mean, for a longer period in the system, than when there are sentiments that this exchange rate will definitely be able to go beyond the level expected, then they will definitely be able to put their money away. So we expect that with that, they will definitely be able to keep the rates a bit stable. I mean, hold the rates, and which is what most of the analysts are also be able to call for. Personally, I feel that that's what they should do at the moment. Just like we said, inflation are not out of the hoods yet. Exchange rate as well has not been able to get to the steady state that we actually wanted it to be. It's the corridor of that, exactly. So maybe holding it, and that will at least be able to instill confidence. The purpose is also to instill confidence in the investors, in the manufacturers, in the consumers as well, to ensure that at least they're able to get have a lot of, you know, optimism about the economy.
One question here is around the interest rate environment having how is it affecting consumer spending?
I mean, that is in fact one of the major factors.
And credit to the private sector.
Private sectors, So just like you said, I think you mentioned that. Now you can see that there is declining purchasing power. It's no longer a story. It's staring everyone in the face. Consumers are complaining bitterly. Inflation has eaten deep, has eroded the value. What you buy for across different facets, go to energy, go to construction, every basic endeavor have actually been affected. So there is serious declining purchasing power. Manufacturing firms as well, because of that, are having, you know, piles and piles of unsold stock that a whole lot of them are actually be able to inventories that they are unsold because consumers are not buying. You go to people in construction space talking about they have a lot of defaults, you know. When it comes to consumers, people are not actually be able to make their payments. So bad loans have increased at monumental rate that you cannot be able to imagine. So we know that is definitely going to be another one. And then what will be able to help consumers, of course, will be to reduce the rates at this level.
Yes.
Reducing the rate will at least spur aggregate demand. But I don't think it's just my crystal ball and my own personal opinion, I don't think they'll be able to do that, at least for now, until June. We expect that if they maintain this inflationary trend, if it decelerates to that period, to like June, then they will likely be able to maintain, maintain that rate at 27.5. If it decelerates further to like June, first half of the year, then they can be considering tension of, let's see if we can be able to move towards, reducing it by some basis point, or even by percentage points, as the case may be. But the question there is, that is one factor. The only way you can be able to help consumers, of course, is not to hike it further. So if you cannot reduce, please hold the rate. Thank you very much. And then for just like you mentioned about credit to private sectors as well, I've just mentioned that it is killing a lot of them. The rate is huge, 32.5%. How would they survive? They are really OPS, man. I'm sure Asborn, a lot of them were really talking about how interest rate is hemorrhaging a lot of their profits, and how is actually be able to lay them bare, in that regard. Not thanks as well to foreign exchange rate instability, energy cost as well. The energy bills have gone up. Not thanks to the recent banding system that has been introduced. Most of them, especially those on industrial metering system or industrial band.
Yes,
the payment is huge as well. So I'm sure the effect of high interest rate, the MPR itself, the monetary policy rate, has impacted consumers, while also the businesses have been heavily impacted as well.
So one thing I've been looking at, basically, I look at the fact of Nigeria is not the first country to deal with inflation at this level.
Okay. Elevated level. Okay.
Turkey dealt with inflation at 50%. And one thing they did, that the monetary authority did there was, with support from the president. In fact, I think it was like an instruction from the fiscal space to keep lending rates low, to ensure that no matter how inflation gets, no matter how bad it gets, they are still able to stimulate the economy
and then
with consumer spending. So why is it that Nigeria has not been able to look beyond just the MPR dealing with inflation? We've been dealing with this inflation thing now since 2020. It's beyond 2023.
Of course, post-COVID
effect and all.
Has actually
been dealing with all of
this
since 2020. Yet it just seems like the only tool we have in our hands is MPR hike. Just keep hiking the MPR, and it's gotten to a state where now lending banks have cashed out. Obviously, they've gotten a lot of
returns from
interest income. Yeah, but when you look at it, consumer spending is almost at an all-time low.
Very important.
It's almost at an all-time low.
Definitely.
So what other tools do you think that the CBN
Thank you very much, David. I think that is so, and that's exactly what I was actually expecting that question to be able to come from you. And so one of the arguments in economics is that can the inclusive or the economic growth of a nation fly on one wing? That's the question. Can we talk about the growth spur that we are looking for, the growth level that we are targeting? Can we be able to fly it on just one wing? Global economists have actually argued to say that no, we need a mix, just like you said, the fiscal policy angle. What are they really doing? So the monetary policy would say, of course, their own goal is price stability, using the tool of money supply and interest rates to ensure that at least you're able to bring inflation down and allow the economy to be stimulated and then allow the economy to run. The fiscal policy angle, which is where taxes and government expenditure will likely come in. And that's where we'll be able to look at it from those angles. Government spending, how has it been? To be able to at least, when it comes to consumer spending, money needed to actually be pumped into the economy. You needed to actually be able to reflate the economy with enough money to ensure that money gets in the hand of the people, salaries are paid on time, people get their bonuses, if there are allowances that are paid to workers, when they get it, the velocity of that money in circulation will go a long way.
Yes.
I get my salary on time, for example, I'm able to buy something from you as a real estate agent, you're able to build a house, that money flows into somebody's hands. I go to the market, into the hand of the cement sellers as well, who can be able to use it to be able to buy rice from the rice manufacturer, and then we allow the economy, we reflate the economy, we tend to be able to stimulate the economy in that way. Of course, the expenditure too must be able to have its own level to where it can be able to get to. But as much as government expenditure, we've seen how it will actually be able to be on the increase in a long while, even though that's not been matched up with their revenue, and then debt is actually being piled up. The other thing is about taxes. And they needed to be able to. So what I think the government can really do, especially in that regard, when we have elevated inflation the way we have it. Yes, the inflation report of 23.1% that was recorded, maybe that would be the lowest since 2023, June 2023 that we've had. But as I said, it is still debatable. People are still questioning that, is this really a true inflation? Is this the real inflation level or just a nominal inflation, you know, that we are just reporting? But that one is still a discussion for another day. But the question would be like, definitely the government, the government from both the monetary angle and the fiscal policy angle, we play a very important role in ensuring that, you know, you reflate the economy in terms of making money available to consumers. That is only one way to at least you are able to ensure that you allow the economy to be running, yes, while you're also fighting inflation. Of course, as much as possible, we say we are trying to be able to fight inflation. But the question we always be able to ask here is, what is the structural cause of the inflation in Nigeria? Is it demand pull? Is it because people have too much money to spend and then they couldn't be able to have enough goods to buy with the money? Or is it more of cost push?
It's more of a cost push.
Thank you very much. The supply side. And that's exactly why the government needed to be able to reflect what was done in Turkey by President Erdogan did, to ensure that at least, yes, the inflation was 50%. We needed to be able to ensure money is also in the hands of the people. That would definitely be able to reflect, to spend. Yes, they have money to spend. Once they do that, we will be fighting inflation with one hand, while at the same time, we are allowing money to be able to get there so that the economy is not dampened. But it's opposite to what's happening in Argentina. Remember, Javier Milei, his own policy was really like cut everything, reduce government spending. And you see that that's not been able to make them to actually be out of the hoods yet. So I'm sure it's between the devil and that place anyway. Yes. The government wants to ensure that yes, the money available. The devil and the deep blue sea.
So now one thing there is that I think just a slight deviation. One factor that really pushed our inflation in Nigeria, when you look at it, when you dip it, is the fact that the government spent 22.7 trillion on ways and means.
That's another very important
level of government spending that I would say never been seen.
It's outrageous in the history of this nation. Exactly.
And when you look at it, what did they spend the money on?
Okay, maybe is it so the ways and means,
so the question,
pay back loans, pay back some of the debt, distribute the money to the governors.
One question I always ask with this is that, is this how, why is the recklessness of that particular move, the recklessness of the move and the effect it's had on the entire economy? Is nobody, is there
no one that can checkmate them?
Is there nobody to question what's going on? Okay, why it went on?
Thank you very much, David.
And so is there a way, can we set systems in place to avoid such happenings again, to avoid such from ever happening again?
Thank you.
Because people who did all of this, they are still
flexing, and except maybe one of them anyway.
They are enjoying okay.
They're like jazz. Maybe except one of them that is still in the eye of the storm and still facing the former CBN governor. Thank you for that. During that time, if you remember, the governor of Edo State, yes, maybe at least that was one of the things, Obaseki, remember, he came out, he said the central bank is printing more money to give to governors. FAAC allocation at the end of the month. In fact, he raised that outcry then. About 60 billion was printed in 1 month. 60 billion, because that was what was actually printed, according to him. Even though it was shouted down to say, fine, it was against them, was anti-bribery, was anti-the president of Buhari. The Minister of Finance then to Zainab Ahmed, if you remember, were those who came out and said, no, there was no recklessness on that part. And then we couldn't be able to see the true picture of that, because 22 trillion the interest on it was about 31 trillion in total. That is just quite unimaginable. When Cardoso came in and then reviewed the rot, that's actually be able to be in the system. So maybe what I'm saying here is, in terms of people questioning and people asking questions, maybe we have those number of governors, that just came out, even though they benefited from the largesse, right? We could be able to call it largesse there, because it's just like an overdraft, taking more than what you earn as revenue, and the government was just being like a daisical with it, just taking out the money, not thinking of what the consequence, the ramification of that, which is what you are saying now. Yeah, at least one of the just like what World Bank and IMF did in their report recently was to commend the new CBN administration for at least reducing by close to about 51% of what they've actually been able to do, and how they have reduced it. But it's not go back to your question. This administration will be able to do that, and then put those mechanisms, monitoring and evaluation mechanisms in place to ensure that the CBN governor himself, maybe that's how the governor, and then the committee itself, who may not be able to have power when it comes to interest rates, but when it comes to, you know, the central bank as the lender of last resort, or as the banker to the government. But that's where the problem lies. That role, that their function, they are bankers to the government, and the government, whenever we have a shortfall in our revenue expectations, what do? We go to the central bank and tell them, just print money, just like what Buhari was doing there.
Yes,
we have a shortfall, print money and give us the money. And that was what actually be able to balloon, that was what ballooned, what's it called? The ways and means overdraft facility.
All of these things,
that level.
all of these things, if I would recollect, were really was perpetuated during the COVID period.
Exactly. I mean, because the government was not able to check. People attention was diverted to something entirely.
The amount of money that was
just distributed and it's pumped out to say we want to do on palliatives, we want to do on COVID relief funds. In addition to the ones that are able to get external borrowings, exactly that was the time. Between that 2019, 2020,
this was the period when Nigeria got almost $3 billion in blending from the IMF.
IMF, exactly. The one we got for relief, the facility that we got that just finished repaying now. So I agree. I think it's around that period that it heightened the more. And then when we couldn't be able to sell oil as much as possible, central bank just prints money so that at least we ensure that the economy is reflated. We ensure that money is out of the governors, they can be able to bring out money, and money be able to get to the grassroots, and then not to be able to tank the economy down to the last breath. But maybe those are some of what have actually been their concern and what they actually haggled over at that period. But with what we heard now, and that's what people might worry, and two things, okay, maybe my worries, and then first is, the CBN now claim that measures are in place to ensure that such is forestalled in the future.
Yes.
That a central bank governor is not just in cahoots with the presidency to just be printing money without check, you know, just be able to do it and then without giving a cost to what's going to be able to happen tomorrow. But the other thing there will be, those measures are in place. And in fact, I mentioned a particular director, an operations unit in the central bank that will be able to check that. And by now, if you go to the central bank website, the last one they released about how they have been able to clear those of the backlogs in the ways and means have actually been quite commendable. We just hope that it's not just audio money, as some people will say. It's not just audio records, or it's not just video records that we just see on the balance of payment report, the balance sheet record of the central bank to ensure this is what they have done in respect of that. But going forward as well, so that when another CBN governor now come on board, that now started telling us again,
we don't have this repeat.
A repeat of that again. That is my worry.
I feel like we need to. I feel like there needs to be systems put in place.
To ensure that you don't be able to give them
this thing does not happen ever again.
So that's exactly my own worry, David. That another CBN governor will not come maybe the next, perhaps it's just 1 year into his tenure, 2 years into his tenure now. Maybe after 5 years, if he's not renewed, and started telling us again what is happening. Because look at an MPC, for example. Look at what they are telling us, the 500 billion missing fund in MPC. We never knew about that until this Ojulari came on board as well, and telling us
897 million spent
on refineries. That's not working. Warrior has not produced one liter. Even though he went there, look at all the media shows and said this is the Warrior they said will not work in November last year. Maybe Port Harcourt at least did up to about 40%. What's happening to that one now? In fact, during the newspaper review this morning, we're there with one of our editor, Mr. Bassi, was even talking about that you know, it's just more or less like a jamboree show of some sort. Because look at how many journalists it took to Warri last year. Yes. I tried to be able to tell that. Look at the naysayers. Thank you very much. Who said this will not work? But look at it. In fact, the report was that the president was actually very mad over that. That was what led to his removal. And then we are seeing what Ojulari, the new GMD, was not telling us about what transpired during the administration of Kyari. It's just becoming unbelievable. So that's exactly what the fear will emanate from, and that we hope we'll not be able to see that.
Let me not go further into that subject.
Of course, okay. It's just a diversion in itself. Discussion as well. Deep black hole that you just keep digging and then you just keep getting into what is actually happening.
Can we ever
get it right?
Can we ever make it? Sometimes you think about
maybe we'll be able to keep just like Elizabeth used to say, we'll keep the hope alive anyway. Yes, I will keep it there. I hope that we'll definitely get out of it.
One question I want to ask is about development finance. What is the way out for SMEs at this point? SMEs are dealing with borrowing costs at 32%. When you look at the borrowing, when you look at the lending profile of the banks are not lending to SMEs.
Of course,
because SMEs simply don't What is your profit margin
That
to
for
be
you to be
sure
able to
that
get that, you can pay back.
what's your profit margin to be sure that you're going to
To
record
pay back
40%? Are you
interest
sure that
rate.
what business are you running that has a net profit margin of 40%
annually.
for you to be able to pay back a bank loan of 40%? So what is the hope for SMEs at this point? Are the governors looking at development financing as a tool?
Tool, of course.
Is the federal government looking at development financing? What is BOI doing? BOI has a BOI. As a mandate. Okay. I think 2023 their loan books is around 500 billion.
Okay. Yes. Exactly.
Meanwhile, we have just some of the manufacturers lending profile around run into 2 trillion.
Oh my God.
So what is 500 billion? 500 billion as a
quarter of that.
It's a portion.
A very small portion, just a fractional amount of the loan request of about 2 trillion. I mean, thank you, David.
So what's the do you think? What's the hope for SMEs at this point?
We just hope. In fact, one of the things that one of our banner headline stories today was the fact that even the microfinance that were actually designed by mandate, by act, to be able to give loans to MSMEs have even deviated from that.
Oh my God.
And they've actually been able to take up the usual fund intermediation process of depository lendings, just like what the commercial banks are doing.
Yes.
I mean, the report was shown there because when Central Bank released their data yesterday, was actually glad that most of the loan books as well, instead of actually giving it to SMEs that are the nucleus, they're actually the catalysts, they're the stimulators of economic activity, they're not even giving it to them. And that is worrying. We're not mentioning about DFIs, BOIs, the BOAs, what are they really doing as well? Because if BOI has a loan portfolio of about 500 billion, just like you said, manufacturing alone is about 2 trillion. Not to talk about other sectors, right? There also be in those spaces who are actually in need, of these loans to actually be able to get that. Maybe that's another thing. But more importantly, and that's exactly what when we ask the microfinance, for example, why is it the case that you actually be able to prioritize, given depository loans, just giving deposit instead of actually giving loans, just taking deposit and loans? And they're saying fine because of risk exposure. And it is not all connected to this interest rate you are talking about. Yes. Just like you said, if you have an NPR of 27.5%. Asymmetric Corridor plus 500, that's about 32.5. What business will you do?
What business are you going to be running?
To be running that, to be getting that amount of money on a monthly basis.
If you're running a
if you are doing what they call these the Ponzi schemes, I don't know, maybe and maybe that's the only one you are doing. Maybe that you can be able to get. So to go and get a loan. So imagine you take a loan and you're paying back that amount of money on a monthly basis, at 32.5%. That is killing. That's going to strangulate the business. It's going to bleed out the business if you are not careful. Exactly. So that is exactly what. So the DFI is needed to be able to come in with those other loans.
Yes.
Maybe those facilities, those relief facilities.
Maybe that's where that government spending now has to come
to, and then maybe divert some of those loans there. So at least now need additional funds. Yes, you can be able to do that. Go to commercial banks, but the DFI, just like I said, before you go to commercial banks, the DFIs should actually be the very first point of call.
Yes.
To businesses to ensure that at least they're able to be able to get friendly loans, friendly rates. They get loans that are quite friendly that allow them to actually be able to boost their business and will not actually be worrying about the cost of borrowing that is really, really pushing down the business and is hitting them down 6 feet under. Okay,
thank you so much for your time. It's been a lovely conversation we've had on.
Thank you very much,
Big Story this morning.
So our time is up.
Our time is up. Our time is fast spent. Thank you so much.
Sorry, I didn't even notice. Thank you very much for having me.
Yeah, so it's been a lovely conversation.
So hopefully, just like you said, before we finish, I think we expect them to be able to hold the rates today, hopefully.
The time is just 11 a.m.
Yeah, thank you. Before by now, very soon we'll get to know what they're going to do.
We'll get their reports. Have a lovely morning, and this is the Business Day Breakfast Show.